What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about Lululemon, ticker symbol LULU, who reported their numbers and earnings after the markets closed and popped a little bit over 13% after hours, trading as much as $362 per share. So we're going to be talking about everything. So revenues, earnings, cash flows, balance sheet valuation, intrinsic value, and technicals. Everything's going to be covered in this video. So I hope you guys enjoy it. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. There is a 16% annual discount available till the end of this month. So that'll give you access to all the private videos, tutorials, all the lectures, buy and sell alerts, trade ideas, swing trading ideas. Everything's going to be included down in the description. Of course, the link's going to be down below, pinned in the comments as well. So this is the state of how Lululemon did after hours, up with a very nice whopping green candle, up 13%, trading as much as $362.35, up over 13%, like I said. And it's been consolidating sideways for the longest time. It's just been sideways in that range between 410 and 270s for quite some time, and it still is. But of course, with a very nice gap up here, expected to open tomorrow. Now, for those of you who don't know, I absolutely like Lululemon from a fundamental standpoint in terms of the company itself. It is phenomenal. It's been on a consistent growth, revenues, earnings, cash flows, diluted shares outstanding, balance sheet. It kind of hits all the check marks. The only thing it doesn't hit is the valuation. And once again, the company proved why it is, a very strong company fundamentally. So total revenues grew 30% to $2.8 billion in the fourth quarter. Company operated store revenue was $1.1 billion, or 40% of total revenue, which was slightly down as a percentage of total revenue, but up from $882 million same time last year. E-commerce revenue was $1.4 billion, and that was up, which is a good thing because e-commerce revenue, the margins are going to be higher for the company, 51.8% of total revenue. That's up from 49.3%, and that's up by about 40%. So from $1 billion to $1.4 billion, that is quite a substantial growth. I just want to make sure that I'm doing that mental math right. Yep, so that is going to be 40% growth for the company on a year-over-year basis. And e-commerce net revenue increased 37% or 39% on a constant dollar basis. And other revenue, which includes net revenue from outlets and wholesale accounts, license and supply arrangements, total $225 million or 8.1% of total revenue. And that's up from $197 million same time last year. New stores, they opened 16 net new stores in North America, 14 in Asia Pacific, and 2 in Europe. And total company operated stores as of the fourth quarter 2022 had a little bit over 655 total company operated stores compared to 574 at the end of Q4 21. So they have added quite a few stores, 80 to 90 stores here. Gross profit was $1.5 billion. That's up from $1.2 billion same time last year. Margins were slightly lower, and they mentioned because of unfavorable impact of foreign currency exchange rates and deleveraging 50 basis points on fixed costs, primarily due to an increase in costs related to our product department and distribution centers, partially offset by leverage on occupancy and depreciation costs as well. But nonetheless, I think the numbers were still absolutely phenomenal. And diluted share count went down, which is a good thing. So they did buy back shares at an average of $323 per share, costing them about just under $69 million. And the share count went down to 127.8 million shares. That's exactly what we are going to be using when we are doing our analysis for the company for 2023. So share count is going to stay at 127.8 million shares with some buybacks priced in when we're doing our analysis. Cash and cash equivalents sits at $1.2 billion at the end of Q4 2022. And this right here is going to be for the entire year. So fiscal year 2022, $8.1 billion in revenue, 30% growth. In the last 3-year CAGR is 27%, and adjusted EPS over $10.07. That's up 29% year over year. With the price at $362, we can do the math. 362 divided by 10.07. It's trading at a little bit under 36 times earnings at the moment. So 36 times earnings for a company growing earnings at 29% is not terrible, but it is a little bit higher for a retail company, right? For a consumer brand company at the moment. This right here is going to be their income statement. So $8.1 billion versus $6.2 billion. That's a 30% growth. And gross profit went up from $3.6 billion to $4.5 billion. Margin slightly decreased. I mentioned earlier the reasons for it. And selling general administrative expenses was slightly higher. And the big expense in the fourth quarter the company took was this impairment of goodwill and other assets, right? So if a company actually does an acquisition and pays above its book value and the value of that company drops over time, then the company has to make sure that it's accounting for it correctly, and that's the impairment of goodwill and other assets. And as a result, Lululemon has a $408 million impairment cost, which resulted in dropping down their operating income from 1.33 billion to 1.328 billion. If it weren't for this number would have been well over 1.6, 1.8 billion dollars, and that's as a result the margins also dropped, operating margins from 21.3% to 16.4%, and net income also pulled back from 975 million down to 854 million dollars on a GAAP basis, and earnings per share at $6.68. So on a GAAP basis, the company's trailing 12-month earnings, price to earnings multiple is even higher at 54. On a non-GAAP basis, it's at closer to 36. So 54, 36, trailing 12-month, both on a GAAP and non-GAAP basis, still suggests that the company is trading at a very high multiple. Cash and cash equivalents sitting at $1.1 billion, as we learned earlier in the presentation. And if you take a look at total assets sitting at $5.6 billion, and goodwill, it does now make a very, very small portion of their total assets, which is a good thing. And total liabilities, so total liabilities, current liabilities, $1.5 billion, and doesn't seem like the company has any debt. We do have non-current lease liabilities at $862 million, non-current income tax payables at $28.5 million, but that's about it. The company does have a pretty solid, pretty good balance sheet with 5.6 minus 3.1. Let's do that math very quickly. That's $2.5 billion of total liabilities with $5.6 billion in total assets. So total assets exceed total liabilities by more than 2. Total and current assets also do exceed total and current liabilities by more than 2. And cash also exceeds total debt for the company. This right here is going from GAAP to non-GAAP earnings, so the conversion there. So $854 million in GAAP net income. They're adding back some of the impairment of goodwill. They're adding back impairment of intangible assets, adding all that back, and we get to adjusted results of non-GAAP net income of 1.3 billion with a diluted earnings per share of $10.07, which is what they have also reported. Now, in terms of guidance, right, what is Lululemon really guiding for? They're guiding for an expected revenue to be in the range of $9.3 to $9.4 billion. So if you do the math, last year they did revenues of $8.1 billion. So 9.4 divided by 8.1, we get to our growth of about 16%. So that is really moderating now, right? We're not seeing a substantial growth, but hey, 16% in this environment is still good growth for revenue for the company. And we're expecting diluted earnings per share to be in the range of $11.50 to $11.72, which if you do the math again, $11.65, let's just take the mid guidance divided by 10.07, that's a growth of 15.6%. So next 12 months, the growth in earnings per share is going to be under 16%, right? And if you take a look at what the analysts are expecting from the company, so let me just go over to, I don't know if I have that here. That's Alibaba. That's a different video. No. So in terms of the expectation for earnings, this is what was on Seeking Alpha based on analysts. So 2023, $9.92. In 2028, they're expecting over $20 per share. And by 2032, the expectations are at over $40 per share. So over the next 5 years, the compounded annual growth rate is pegged at 15%. And over the next 9 years, the compounded annual growth rate is just pegged at 17%, a little bit under 17%. So these are the two growth rates for the next 5 to 9 years for Lululemon. And we just heard from the guidance itself, the expected growth rate is going to drop down to 15%, revenue also at 15%. And the valuation's trading at a little bit over 30 times earnings, right? So if you come back here, again, you'll notice that 35, 31 times earnings. This needs to be updated because trailing 12-month GAAP basis, it is certainly a lot higher than 34. Then we got price sales trading at over 5, which is, I would say, reasonable. But again, for the industry that it belongs to, it's still high. And price to cash flow is certainly a lot higher, 34 to 62 times earnings for the company on a forward basis and a trailing basis, respectively. So going over to our analysis, right, let's just go with 15%. Let's just go with a modest 15% growth over the next 5 years that Lululemon is going to be able to achieve for their earnings. We go with a P multiple. I'm going to come back to that. 12% discount rate, 10% margin of safety, and 1% share buyback because the company has been buying back shares over time. And if we go with a P multiple at close to, I would say, 20 to 24, let's just start with 20. We get a fair value of $253, and the price right now trading at $362 per share. So that's the discrepancy there. This is going to be that sensitivity analysis. Again, if you do believe that the company can grow at 23% and deserves a 24 times multiple, then your fair value ends up at 425. Right now, the stock trading at 362. We're closer to over here. This is going to be that price point at which we are currently trading at. That's going to be 22 times earnings and a 21% growth expected, which we already know from the analyst, from the company itself. 21% is not going to be that number. It's going to be closer to 16%. Now, look, it can be higher. It can also be lower. So we have to really make that assumption there. And I don't want to go with an aggressive estimate, assuming that the company is going to be able to grow earnings at 21, 22% every single year for the next 5 years. And hence my fair value is at 360. No, I have to be conservative. I have to account for those margin of safety there. And as a result, we've got $253 as the fair value right now for Lululemon. And again, the interesting thing is that it was in fact trading at 256. This right here was that support level, very, very strong area of support. That green rectangle trading pretty much at those levels for some time. This was back in May of last year before, pushing higher, coming back down in the 270s, pushing back up to $383. Pretty substantial rally here of a little bit over 38%, and then coming back down and now starting to push back up. So 410 is going to be that resistance, technically speaking. This is going to be that level to watch as a resistance and a potential target and support level. And my fair value is going to stay pegged at 250s for Lululemon. There is some flexibility. So on the high end, we've got 266. On the low end, we've got 244. So that is our flexibility range, plus minus 5% on that fair value. So hope you guys enjoyed this video, and a very strong numbers being reported by Lululemon, but the future growth expectations are coming down a little bit. They're not at 30, 40, 50% as the valuation suggests, but instead it's closer to 15 to 16%. So we also have to recalibrate our expectations on the fair value as well. So 250s around those levels is going to be where I would be interested in buying this company. I've been meaning to buy this for a long time, but it's just, it's been a little bit on the higher side in terms of valuations. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. Very limited spots left with a 16% annual discount that does expire at the end of this month. Happy investing. I'll see you all in the next video.